Okay, good morning everyone. Your accounting tutor here. So today we're going to learn how to solve cash budget related questions. Okay, so you can see here, this is a question I made up. Okay, so on the right hand side, I'm going to show you how to solve this type of question step by step. Okay, so let's dive right in. So these are the facts about this company A. Okay, so they say credit sales payment term is 10% of the sales at the end of each month, and then the remaining 90% is in 2 months. Okay, so from this information we know they're not gonna get cash right away. Okay, so they're gonna get 10% of the sales they made during the month, and then the remaining 90% is gonna get collected in 2 months. Okay, and then they're going to pay their suppliers in a month after purchase was made. So let's say if they bought something, let's say inventory, in May, and then they're going to pay their suppliers in June, so in a month. Okay, and then I give you some sales projection numbers, okay, from February to June, and then some inventory purchase projection numbers, okay, and also I give you the closing balance of cash of May, which is 2,000. And then there are some expenses incurred during the month. Wages 20,000, production overhead is 6,500, which also includes 500 depreciation. Okay, and then the company also bought a new machine in May on cash, so for 10,000. Okay. So how to draft a monthly cash budget from April to June. So everything has a template, so I'm going to show you the template. So first thing first, the first row will be cash inflow, total cash inflows, how much money they're getting during this period. Okay, so I'm going to put it sales cash collection. Right, they're going to collect cash from their customers, sales cash collections. So let's say in April, how much money they're going to get. I think there are 2 parts, right? So the first part is 90%, because they're going to get 90% in 2 months, right? So 90% in 2 months, and then 10% current month. Okay, so for April, so we know they're going to get 10% of the sales they made in April, which is 56,000, right? Okay, and then they're also going to get cash coming from February's sales, 90% of February's sales, which is 40%, right? Okay, so the total cash they're gonna collect in April is this 5,600 plus 36,000. Okay, the total is 41,600. Okay, that's the total amount of cash they're gonna collect in April. Okay, 2 parts: 10% current month sales, and then 90% of the sales they made 2 months ago. Right, okay, and then we do the same for May. In May, we know they're going to get 10% of the sales they made in May, which is 48,000, right? And then they're going to get 90% of the sales they made in March, which is 45,000, yeah? Okay, and the total will be this number, right? And then for June, we do the same. 10% of June's sales, which is 49,000. Okay, and then 90% of April's sales, which is 56,000. Okay, and then this is the total. Okay, so now we have the total number of cash inflows ready. Okay, next we're going to calculate the total cash outflow. Okay, total cash outflows. First item is inventory purchase, right? Because each month they're going to buy product, buy inventory to sell, right? So inventory purchase. So in April, they're gonna pay what they've bought in March, which is 13,500, right? Because they're paying their suppliers in a month after purchase was made. So in April, they're gonna pay what they bought in March, and in March they're gonna pay what they bought in April, and then the same goes with June. In June, they're gonna pay what they bought in May, right? So these are the cash outflows related to inventory purchasing. Okay, and then next they're also paying wages, right? That's this number, 20,000 per month. Okay, so that's 20,000 per month. They just put a number in, right? And then the next line item is production overhead. Okay, so just be very careful with production overhead, because production overhead total amount is 6,500, but within this 6,500, there are 500 depreciation included, right? And what we're making here is cash budget. Okay, so because it is a cash budget, so what we care and what we only care is cash related transactions. Okay, any cash inflows, cash outflows, we care. Okay, so we don't care about non-cash transactions. Okay, so depreciation is non-cash transactions. Okay, because depreciation is just the value of your asset goes down, right? You're not paying extra money. There's no cash outflows. Okay, so the production overhead, okay, the number that's going to sit here is not 6,500. It will be 6,500 minus 500. You need to exclude this 500 depreciation. Okay, and then the same number for May and June. Okay, and then the last item is machine they purchased on cash in May. So May, that there is a cash outflow of 10,000, right? Okay, so now you can calculate the total cash outflow for April, May, and June. So if we just do the sum, okay, so these are the total cash outflows. Okay, so now you can see we've got total cash inflows ready and total cash outflows ready. So now we can calculate net cash inflow or outflow if it is a negative number. Okay, so the net cash inflow or outflow will be net cash inflow, right? The money we collected during the month minus money goes out to cash outflow. Okay. Okay, so you can see, okay, so in May there's a negative number, which means they spent a bit more than they earned on cash, right? Okay, so now we have the net cash inflow or outflow of the month, which is the change happened during the month, right? And then if we know the beginning balance of cash, okay, if we know the beginning balance of cash and we know the change, then we'll be able to calculate the end balance of cash, right? Okay, so what is the beginning balance of cash of April? So in the question they told us the closing cash balance of March is 2,000. Okay, so closing cash balance of March is also the opening balance of April. Okay, so the opening balance, the closing balance of March is also the opening balance or the beginning balance of April. So we put 2,000 here. Okay, so now we have the beginning, we have the change happened during the month. Now we can calculate the end balance of cash, which is beginning balance plus the change. Okay, so this is the end balance of cash of April. Okay, then the same logic applies. The end balance of April is also the beginning balance of May. Okay, so you can see same number here. The end balance of cash of April is also exactly the same the beginning balance of May, right? So now you can calculate the end balance of cash of May, which is the beginning balance, plus or minus any, well, plus any change, right? Okay, and then 1,600 is the end balance of May, which will be our beginning balance of June. Okay, and then same. Now we can calculate the end balance of cash of June. Okay, so this is the monthly cash budget for April to June. Okay, as you can see, cash inflow, cash outflow, and net cash inflow and outflow. This is the beginning balance, and then we'll be able to calculate end balance of cash. Okay, all right, your accounting tutor here. Let me know your thoughts.